Welcome to another Market Matters update. Sean, you've been talking a lot about interest rates in the reports recently. You've just made the acquisition of Telstra. Is there anything else on the radar in that space that you're looking to buy in the short term?
No, I think overall, Nick, we are entering a pretty boring cycle of the market. Markets go sideways 85% of the time, and when you try and force things in that sideways motion or sideways period, you can lose money, pay commission, get in and out, get frustrated and achieve nothing. You need to sit back and have a plan, as I think I alluded to 2 weeks ago. When that plan comes into execution, bang, away you go. So I've bought Telstra because I do think we're going to have interest rates lower for longer. So Telstra is yielding over 7%, actually under 7% now, but it was over 7% when we bought it for the coming 13 months. It's gone up nicely. I think it's a quite safe trade compared to, say, the banks just here, because the banks would get hit if there was thoughts of a recession. So I already own CBA, I already own a small amount of Bank of Queensland. I see no reason to sell those stocks, but CBA all-time highs yesterday, 87, 60 odd. What are we looking at? We're looking at a market that is starting to factor in all the positive news around interest rates pushing stocks higher. I think we are going to get a bit of a glow off top, maybe we're already getting it in the fixed interest space. And when I say fixed interest space, money is coming out of bonds, it's coming out of banks, as in out of banks term deposits, and it's going into stocks looking for yield, and it's just pushing those stocks up probably to where they should be in this environment, assuming we get no recession. But I think it's too late to buy them now.
Do you see Telstra with a 7 in front of it, or?
I noticed
predictions?
I noticed a fellow writer put that, it was in the Fin Review today and a few other articles, and he thought that it would get up towards $7.
Yeah.
Do I think? I see no reason why not. I think interest rates in Australia can easily go to 2%. And if Australia, we got rates at 2%, why wouldn't Telstra have a 7 in front of it? Especially if it can just maintain its dividend, maintain its profitability. Not to think it's silly, then it should do.
Okay, awesome. And just one last thing. Had a lot of subscribers sniffing around the commodity space for some buys. Is there anything on your radar there, or do you think it's just in a perpetual bear market and they're going to keep going down?
It's not in a perpetual bear market, but I would not be investing in this space. And there's something I keep saying, very, very different. It's a great trading environment, great in and out. I mean, BHP's just recently had a $3 rally. Well, that's over 10%. There's nothing wrong with 10% return in a month or two. In fact, less than a month or two. So I think the trading opportunities are there. We saw that with the oil sector. The oil sector got absolutely smashed, and it's bounced back quite well in lots of spaces. But I think what you've got to do when you start trading these vehicles is say, right, what's built in? How much panic is there? Overall, I don't think the market is really factoring enough of the downplay. They're not factoring in crude oil where it is, or it can go lower. They're not factoring in iron ore at 60 or maybe 50 or 40. They're not. They're factoring in higher prices. So I would not be buying any of this sector as a trade into strength. I'd only be buying into big sell-off days, looking for some consolidation, maybe a bounce. I mean, Goldman Sachs came out today, one of my old workplaces, and said that they think all the risk on the commodity space is on the downside. And that wouldn't surprise me as well. So, overall, I don't think we've seen real panic in this sector, with the exception of a few days around the oil area. For good reason, of course. We all saw what happened to the oil price. So I do believe that the trading opportunities are not investing opportunities. A lot of people are saying, well, we're getting 5 or 6% yield on Woodside or BHP. Let's just wait and see what dividends they do pay over the next 12 to 18 months. Because what we've seen in the iron ore price, the oil price, they are being tremendously aided by the Australian dollar falling, because of course they get US dollar payments. But I don't think that's enough to offset the depreciation in their underlying commodities. So I think you might see them have to pull in those dividends, especially Woodside.
Awesome. Lovely. Thanks for another insightful update, Sean.
Pleasure. Don't be too bored.